of introduction, my name is Thompson Ratunji. I am the portfolio manager at Quidax. Basically, what I do is help our customers ensure that their assets are well covered. So for all your trades, you have the assets that back them up and also help you in pricing and help you in also liquidity provision. So that's majorly what I do at Quidax. Prior to Quidax, I worked at the bank as a trader as well, as a fixed income trader for a while, on trading fixed income securities like treasury bills, bonds, and the likes. And at Quidax, I'm just here to do awesome things for our customers and try and do the best we can to help everybody make money using crypto. Thank you.
Thank you, Tomisi. Next, over to you, Moses. Let's meet you.
Of course, good afternoon, good morning, good evening, wherever you may be connecting from. I am Moses Adejumo by name, and for the last couple of months, I've been at the helm at Candon Technologies as the FX trader or as an FX trader at the company. So we basically engage in a lot of arbitrage as well, a lot of trading and a lot of liquidity management for the company. And it's exciting to be here to talk about how we can help ourselves in our personal lives to make gains in the financial markets. Thank you.
Thank you, Tommy. Thank you for that introduction. So we're just going to kick things off with the basics. What is crypto arbitrage and how does it open the door to profits? Now, to make things easier, I'm not the expert here. Tommy and Moses are here to explain things to us. So this question is to you, Tommy Singh. In simple terms, how would you explain crypto arbitrage to someone who is new to crypto?
Okay. A simple definition or simple interpretation of crypto arbitrage is simply you trying to take advantage of the price differences of an asset between two exchanges, right? So let's say, for example, the price of BTC as at this moment now. Most times you find out across exchanges, you don't have perfect pricing in terms of if BTC today is at 36,350, right? It's not, or as at this second, that's what I mean. If it's at 36,350, it won't be at 36,350 across every single exchange, right? There will always be slight differences in price. And that's because there are different buyers and sellers on this exchange, and all of them are determining the price at which they are willing to buy and sell. So because you have a particular asset that is being traded on multiple exchanges, it creates the room where the price difference, which is what arbitrage really is, the price difference exists across exchanges to different degrees. So between exchange A and B, the price difference can be $2. Between exchange A and C, the price difference can be $10. Between exchange A and D, it could be $100. It depends on what exchange and it depends on what asset we're talking about. So crypto arbitrage is you trying to take advantage of that change in which you want to buy low, maybe at the lowest price exchange, and go and sell at the highest price exchange, so you can make that difference. That's in simple terms of crypto arbitrages.
Thank you very much, Tomisi. My next question will be for Moses. We want to get into types of crypto arbitrage now. So very quickly, Moses, it's also important to, riding on what Tomisi has said, it's important for us to know the types of crypto arbitrage that we have. And we already know that the major thing is to buy and sell on different exchanges. But what are the different ways that we can go around doing this?
That's a very good question. And, at this point, it might be a good time if there's somebody that is connected that actually wants to practice it. It might be a good time for them to, or for you to take a note and maybe jot it down, because it's very, very simple and you can literally get how to use your Quidax app to engage in arbitrage right after this meeting. So what I'm saying is, in the next maybe 10 to 15 minutes, it is expected that everyone listening is able to actually become an arbitrageur, which is the name of the person that partakes in arbitrage. And you can always do arbitrage in every market, not just crypto. In finance, there's so many markets. There's the forex market, foreign exchange markets, there's the commodity markets. But what makes crypto special is the fact that crypto has some intrinsic opportunities that just lie therein because it's crypto. Now, there are different types of arbitrage, but I want us to understand that it's basically buying low in one place and selling high in another place. And I'll talk about the first one, which Tomisin already talked about. And the first one is the spot arbitrage. So for the spot arbitrage is when you try to take advantage of arbitrage opportunities in the spot market. So what is the spot market? Spot market is where you can buy crypto assets, because I'm talking relating to crypto now, where you can buy crypto assets to keep. So somebody says he wants to buy Bitcoin and keep. Where does he buy it? It's in the spot market. So if you look at all those pairs, I don't know if you can hear me at the back. I have some background noise that somebody complained about. Okay, cool. Now, if you look at the pair, you have BTC USD. Sometimes you have BTC slash ETH. You know, you have BTC, or you, let me not even use BTC. You can have so many cryptocurrencies. There is Chainlink, there is Cardano, ADA slash something else. So the first one that is on the slash, the first asset that you see is actually the base currency. Then the second one you see is the quote. So the prices of these assets are determined by the quote currencies. If you want to buy BTC USD, you see the price in USD because the USD is the quote. Or if you want to buy ETH USD, you see the USD in the value in USD because USD comes last. So that's the quote. And why is everything like that? Is because it's a market. Market simply means you have to buy something and sell something. So that's why you cannot just go and say, I want to buy ETH, which is Ethereum. You have to buy ETH against something, which is ETH USD, ETH BTC, or whatnot. So spot arbitrage is just looking at the spot market, looking at the price that you get in one market, and just looking at another exchange and selling it there. So let me practicalize it. If I go on my Quidax app right now, right, like if I was on this call and I was listening to this call and I jumped on my Quidax app, I would definitely see the price of Bitcoin there. I'm sure somebody could literally see the price of Bitcoin there right now. If you were able to buy that Bitcoin at the price you see there, and you go to another exchange, any exchange out there, and you see a different price which is higher there, what does that mean? That means there is an opportunity. You can easily buy the Bitcoin on Quidax and sell it on another exchange. You would then need to consider the fees, because you would pay fees to be able to buy the BTC, for instance. You would also pay fees for you to be able to send the BTC to another wallet in another exchange and then sell it there. So if I'm buying BTC, I'm going to give fictitious numbers. If I'm buying BTC for the sake of understanding, I'm buying BTC for $1,000, and I'm seeing that on another exchange, BTC is trading at $1,200. It's very simple. I'll literally just buy BTC on one exchange, which is Quidax, and send the BTC to another exchange and sell it there. And just like that, I've made money. The, the difference you see in this market might not be so much. So you might make a little fee, a little gain on the spot trade. But that's why arbitrageurs are high frequency traders. So you do it over and over again. And what better joy than to be able to do the same thing over and over again and get money every single second. So it then adds up over time. I did a little bit of math and I discovered that with $1,000, one can actually make $1,000 in a month trading arbitrage. I actually did that calculation over the weekend, and it's very doable. But it to take a month. It to take a month to make 100%. But that is why you're an arbitrager. You do the math to be able to know how much you gain, and that is spot arbitrage. It's very, very plain and simple. I'm going to buy a currency, crypto, on one platform, and I'm going to sell it on another platform at a higher price. So now the next one I want to talk about is the another type of arbitrage, which involves futures trading. Futures trading is very common on the internet. A lot of people like to talk about trading FX, but that has a lot of big risks in itself if you just trade futures on its own. But you need to understand that you're focusing as a new arbitrager, you're going to be focusing more on spot arbitrage because that's the bread and butter of arbitrage trading. You're buying a currency on one spot market and you're selling it on another spot market. But when it comes to futures trading, you are taking advantage of fees. You're taking advantage of fees. So it's going to get a bit complex. I'm trying to simplify a pretty much complex philosophy, ideology, basically. So you're going to look at, if you want to look at the futures trading, futures arbitrage, you're going to look at the two markets as liquidity pools. Let's just say you're thinking of arbitraging between Quidax and another exchange, right? So Quidax is a liquidity pool, and that other exchange is a liquidity pool. I don't know if I'm making sense. You can type 111 in the chat if I'm making sense. So the fact that they are looking at one liquidity pool, it means that there are two assets in that liquidity pool. Why? Because if you are looking at only one asset, you are thinking of BTC/USD, which USDT, which means you have BTC, Bitcoin, in that pool, and you have USDT in that pool. In centralized exchanges, the price of every asset is determined by the order book. So it's going to be determined by the last price that it was sold, right, on the exchange. Comparing to decentralized exchange that they actually make use of market makers. And also in centralized exchanges, we make use of market makers, right? So they will help us to balance the price. Now let's look at it critically. If I have two pools, one pool has BTC USD, another pool has BTC USD. But in Quidax, BTC USD is cheaper. So I want to buy here. Then I want to sell in another exchange, which is higher. But the moment I take away from BTC, if I buy BTC from Quidax, I've removed BTC, which means in that pool, there is more USDT and less BTC. So it means that the market is going to try to balance it. The pool must be balanced. So it's going to try to balance it one way or the other. And that's the reason why the arbitrage needs to be very fast, because this difference in the price of those two exchanges, they will eventually match up. If it's in a perfect world, in theory, where there are only two exchanges in existence, it will balance up and they will have equal prices in no time. So why that happens is because you are going to have someone taking out of the BTC, and the market is going to find a way to adjust that by reducing the price of USDT and increasing the price of BTC. So now you're not going to want to buy BTC from Quidax again, because the market is gradually increasing the price of BTC. So the more arbitrageurs are buying that BTC, the more the market tries to just slightly, ever so slightly, increase the price of BTC and reduce the price of USDT. Even if it was BTC/ETH, it's the same thing. It will slightly increase the price of BTC and reduce the price of ETH. So what you now have is that the buyers will not now want to buy from that pool again. They're going to want to sell into that pool. So the people that bought low before, if they waste time, they will be forced to sell. They can't buy into that market again. They'll be forced to sell. I know why I'm saying this, because I want to go into futures arbitrage. And futures arbitrage is just when you take advantage of fees and you get paid on fees. So a futures asset, a futures Futures contract is basically an agreement to buy or sell a commodity or an asset at a future time. I'm agreeing to sell my phone at 1 million naira next year, even though the price of the phone this year is maybe 700,000 naira. Do you understand? So in the future price, I'm going to sell it. So I don't want this to be too confusing, but let's look at futures arbitrage like this. The first thing you need to consider as a futures arbitrager is the funding rate. Funding rate is when, now this is why I said take out your jotter, honestly, because the funding rate is when you have a measure of long positions and short positions in the market given to you as a figure, as a number. So generally in crypto, or let me just break theoretically, when there are more longs than shorts, you would have a positive funding rate, which means above zero. And when you have more shorts than longs in the market, you're going to have a negative funding rate. When you have a positive funding rate, it means that there are more longs, and therefore the longs will be paying fees to the short positions. So in a positive funding rate, when you are going short and there is a positive funding rate, you will be paid fees, even though they are very tiny fees. I don't know if I'm making sense. And if it's if you have a negative funding rate, you will be paying the long positions. Futures arbitrage involves buying an asset, e.g., Bitcoin, at a certain price, e.g., $100. So I'm buying Bitcoin at $100 and I'm keeping Bitcoin. Then I'm going to the futures market to take an arbitrage opportunity. What is the opportunity? Funding rates might be positive, meaning that long positions are paying fees to the short positions. Remember, I've bought Bitcoin, and I bought Bitcoin of $100. And I'll go to the futures market and short Bitcoin $100 again. Now, which means 50-50, no cheating. As Bitcoin price goes up, my futures income goes down. If you know about futures trading, you can understand me better. Okay, maybe I'm going too fast. Okay. What I'll say is that let's go to the basics. Let's go to the basics. I want to be a futures arbitrage trader. I want to be a futures arbitrage trader. And this is why I say when you're starting out, you just want to trade in spot arbitrage. And I'll go through everything in a minute. But I want to be a futures arbitrage trader. So I'm going to go into the market and buy Bitcoin, knowing that the funding rate is positive. And I'm going to short Bitcoin at the same time that I'm buying it. So I'm going to buy on spot market and I'm going to short Bitcoin on the futures market. Now, when I hold this position, the income I'm going to get is the fees that are being paid to short positions. It's very simple. I don't know if it's making sense. It's very straightforward, just like that. I buy Bitcoin on the spot market. I short Bitcoin in the futures market. I'm not making any money from my spot holding, and I'm not making any money from my short position. Where am I making money? I am making money from fees that are being paid to short positions. The only way it's going to make sense to you is if you even understand what I mean by long positions and short positions. But don't worry. If you don't understand that, the most important thing is that you get on your Quidax app, you can do spot arbitrage, where you buy a currency from one exchange and sell that currency for a higher price in another exchange. Then you have the triangular arbitrage. If there was more time, I could maybe share my screen, but honestly, I will just go through the triangular arbitrage because I'm looking at some comments that are saying I'm lost. But the reason why I think I'll just go for that is that I can see way more 111s on the chat, so which means a lot more people understand what I'm saying. So I'm sure we'll be able to get better. All right, then there's the triangular arbitrage. Triangular arbitrage is when you look at the market and you want to make money off of multiple buy and sell positions. So I'll give you a practical example. I buy Bitcoin for 100. I have $100, so I buy Bitcoin. When I buy Bitcoin, I want to make money as an arbitrager. I want a low risk way of making money. So I'm going to buy Bitcoin now. Now, once I buy Bitcoin, I'm going to sell this Bitcoin for Ethereum. So I'll trade my $100 a Bitcoin to buy Ethereum. Now, I'm trading this Ethereum to buy maybe Cardano, ADA. Then when I trade this Cardano back to Bitcoin, guess what? I have like 110 Bitcoin. How did that happen? It's a miracle. It's not a miracle. It's triangular arbitrage trading. If that makes sense, I think that covers basically all the types of arbitrage trading that I think is important for us to note. The first thing I said was the spot arbitrage trading, where you simply go on Quidax, you buy one asset, and then you go to another exchange, you sell it there. Bitcoin is currently trading at maybe 35K or 34K. So if it's 34K, if it's 35K on Quidax right now, and you are looking at another exchange and Bitcoin is trading at maybe 35, 200,000 USDT. It simply means you can buy Bitcoin at 35K. When I say 35K, I mean 35K USDT. You can buy Bitcoin at 35K on Quidax, and you can go and sell it at 35,200 on another exchange. Very simple, spot arbitrage. Futures arbitrage, I'm going to buy that Bitcoin, then I'll go and short the same amount in the futures market, knowing that funding rate is positive and longs are going to pay shorts. So which means I know I'm going to get fees, even though I'm not making any money in my buy and short. A lot of hedge funds do this. Oh yeah, that is what they do. Then the third one is triangular arbitrage, which is when you are really good at what you are doing and you've made the calculations. I was talking with a friend like last week, and we're looking at some currencies that you actually would buy and sell, buy, maybe you buy Naira, sell to this, turn it to dollar, turn it to this, turn it to another currency, turn it to another currency. And when you turn it back to Naira, you discover you have more Naira in your hands. That is triangular arbitrage trading. Thanks, Ebon.
Thank you so much, Moses. That was really insightful. So we're going to get into our first giveaway right now. Make sure you have a Quidax account and make sure that your KYC, your basic KYC is done, because without that, we might not be able to credit your Naira wallet. So the giveaway question is this. Moses has mentioned it more than once, more than twice. So what did he say that the person who does arbitrage trading is called? The first two people to answer get some Naira in their Naira wallets on Quidax. Anyone who does arbitrage trading, what are they called? Okay. Thank you. I think that's closed by now. We have our winners. The first two answers came from Babatunde Agbomeji and Olajide Adegunwa. Your spelling is wrong. Sorry. Moses, can you look through the comments and see who gets the right word and the right spelling first? The first two people.
Okay. Well, I can see that everybody was following, so I'll say Babatunde.
Yeah, for sure.
Gomedi, yes, got the right spelling first. Edafe was close, but he took an extra step. So let me see. Wow. So the next person was SS, but SS sent it to the host and panelists. Then we have Favor Joseph.
Favor Joseph, okay.
Who sent it
When
to
you are
everyone.
sending in your chat, ensure,
Okay,
except
so
if it's a private message for me or for the panelists, ensure that the chat is set to everyone, not host and panelists. So we have Babatunde Agbomeji and Favor Joseph. Please drop your key username so that we can take note of that. Favor Joseph and Babatunde Agbomeji. So let's get on with with this. So we've moved on with how to types of crypto arbitrage, thanks to Moses. To Tommy saying, we want to talk about how to get started with crypto arbitrage, and with the explanations that we have so far, I'm sure people are excited to start doing this on their own on Quidax. So Tommy, how do people get started? Do we just open a Quidax account and another exchange and start looking for price differences, or there's a real life example that you can share to make this more practical for everybody?
Okay. Am I clear now? I think someone was saying that I was echoing or something before, so I just want to ensure that I'm clear now.
Sorry, you said what?
Okay, so that clears my point. Someone said in the chat that I was not clear, so let me.
Oh, okay, it's clear. It's clearer now.
I think it should be better now. All right, so how do we get started on arbitrage, right? The first thing you want to do is that you want to make sure that you are registered, right, on the exchanges you want to use. Definitely Quidax should be one of the exchanges you're thinking about because of our favorable pricing of all our assets, right? So you want to first think about opening up accounts, because remember, as Moses rightly said, you want to buy from one exchange and go and sell on another exchange when it comes to spot arbitrage. And spot arbitrage, we believe, is the best for most people to do, right? Because it involves less technicalities and it is easier to execute than futures arbitrage or triangular arbitrage, right? So the first thing you want to do is that you want to ensure that you are registered on an exchange, right? Or multiple exchanges, because the point is that you want to buy from someone and want to go and sell somewhere else. So you need to have done the KYC of the other exchange, done KYC of Quidax, make sure that you're all funded and things like that, right? So once you have your accounts set up, the next thing you want to now do is start scouting for opportunities. Moses said that also in his, when he was teaching us, that you need to be fast, you need to be able to do some calculations to be ensured by the time you account for things like fees and your cost of transacting, right? So once you have your account open up, then the next thing you want to do is start scouting for opportunities, right? Typically, you would have maybe 1 to 3 exchanges or 4 exchanges that you usually follow their pricing. And I don't mean pricing across every asset, because it would be very tough for you to find, to follow everything, right? You can pick maybe a couple of coins or tokens that you are very comfortable trading, that you know a lot about, you've done your research about. They are solid exchanges or solid projects, solid tokens, solid coins. We can tell you that on Quidax, the only currencies that we do carry, right, are things that are vetted by our team, and we are comfortable with those currencies being available on Quidax exchange, right? So by the time you look at all those currencies that are available, you can now start looking at, okay, what's the price of, say, BTC on Quidax? What's the price of BTC somewhere else? Exchange B, exchange C, exchange D. You can now start looking at the prices and seeing, okay, this difference in price, by the time I calculate, okay, if I'm to buy $1,000 worth of BTC on Quidax, and I now have to move it somewhere, what's the withdrawal fee? What's my transaction fee? By the time I deposit in that place as well, how comfortable am I with the second platform? Because the other thing you have to be wary about is that whatever exchange you want to carry out arbitrage on must also be an exchange that can fulfill you, right? So while you can buy on Quidax easily, you need to be sure about where you are going to go and sell, especially if you are going to go and sell somewhere else on another exchange. You need to have done your research about that exchange to ensure that it's safe, ensure that your deposits will be safe, your transactions will go through, right? Because the last thing you want to do is, I would tell you that you also have to be wary about, why arbitrage is basically free money, you have to be wary about too good of an opportunity, right? Because if on Quidax you're seeing BTCs at 36,000 and on that exchange you're seeing BTCs at 38,000, you probably want to be wary before you probably want to think twice rather before you do that transaction there, because ideally, as Moses said, you have to be very fast in arbitrage, right? So when he was explaining the concept of liquidity pools, he was saying that the price will start moving, and at some point it will balance out. Most times, arbitrage opportunities are not that wide, which is why it's saying that it will probably take you an entire month to make 1,000. It's going to be little trickles of money, and you can now capitalize on every single opportunity that you have. But if one opportunity is going to give you $3,000 gain or $4,000 gain, then you have to be careful, because the last thing you want to do is move your token or move your coins from Quidax and move it to another exchange to go and sell, and you find out that their sell button does not work. Okay, you want to withdraw the coins back, you cannot withdraw it again, right? So you have to be very wary. So you need to do your research. That's to do with the risk involved in arbitrage, right? Especially when it comes to spot arbitrage. You need to do your research concerning not just the exchanges you're going to be doing the arbitrage on, but also the tokens, right? So you don't want to just go and buy some extremely volatile security, and you want to run arbitrage, because by the time you want to move all your assets and do everything, before it gets confirmed on the blockchain and stuff like that, you can find out that that opportunity has passed you by, right? So at the end of the day, to get started, get registered, do your research on the tokens on the exchanges you want to do. And it's as simple as Moses has made it shown us, which is simply you buy here, you move it, you go and sell there.
Thank you so much. I pasted our social media links in the chat. If you're on Instagram, you can follow us. If Twitter is your vibe, you can follow us on Twitter. And we're also on Facebook as Quidax Global across all channels. No full stop, no commas, no numbers, just Quidax Global. So moving on, Moses, so far all of this sounds very great, right? And at this point, I feel like I should just start trading immediately because it looks very easy. But at the same time, I would need you to add more to what Tomisin has said. What are the things that Quidaxians and everyone else that's looking to join Quidax or start arbitrage trading, what should they be aware of before they start, doing arbitrage trading?
Yeah, Ebon, thank you. That's a very good question. Um, so I would only say you need to be wary about three things, because to be honest, you want to be wary, but you don't want to be too wary, because fear and scared trading doesn't really make too much money, but you still need to be cautious. So the first thing that I would say you should take note of, I've already mentioned, is timing, because before you know it, the opportunity you are seeing is no more. So if you must be quick to jump in when you see an opportunity, and you must be quick to step back or to take caution when you are not too sure. So in everything you do, you must be quick. So the first thing is the timing. Timing is almost everything, if not everything. Then the second thing I want to mention is something Tomisin hit on, which is the security. You have to be on a platform you trust. Imagine buying a currency on XYZ exchange, and the exchange just gives you an explanation that, hey, it's been tough luck, we have to shut down for now. And you just bought 1,000 naira worth of Bitcoin trying to send it to Quidax. Well, that's why you need to buy from maybe Quidax, or you need to be on a secure platform to trade. And yes, the last thing I will consider is the fees. You understand? Because the fees directly affect your bottom line. So those are, honestly, you shouldn't even bother to look or to worry about any other things apart from these three. If that makes sense, you can put 222 in the chat. I think that's okay. Just focus on the timing, number one. Focus on the the fees, because they're going to affect your gain. You have to pay fees. And the third thing is use a secure platform. Once you have those things on check, you have your strategy on check. The last thing will be you and yourself. You have to master yourself. So you must not be greedy. You must conquer yourself. You understand? Because trading is a get rich slow scheme.
Thank you so much. I have one more question for Tommy Singh, but before we go into that, I have another giveaway. So guys, I don't know if you're ready. If you're ready, please show me that you're ready in the chat before I go ahead to ask my question. And make sure that your chat is set to everyone. I'm still seeing people sending their responses to host and panelists. We need everyone to see your response. Thank you. We will let you know how to get the recordings after this webinar. So moving on. According to Moses, the book of Moses, how many types of arbitrage trading do we have, and what are they? Who is this person? Types of arbitrage trading. How many are there and what are they? Again, make sure that, because you will be disqualified if you don't have, there won't be any way for us to send your winnings if you don't have a Quidax account and you don't have your basic KYC done. So please, Moses, again, you're going to be our Yakubu. You're going to be our Yakubu for this giveaway. Ensure that you are free and fair. So my last question for Tommy C. Sorry. Trying to hold on. Sorry for the break in transmission. We're moving to choosing an exchange for trading now. Moses, have you chosen your winners?
Yes, I can see the first person that mentioned it was Chinechemirim Joseph. So that's the
Sorry
first
if he has
person.
murdered your name. Sorry about that.
Sorry. I think
You can just put it in the chat for everyone to see. So I'll just ask Tommy see my question now. So before we go, I want Tommy to touch on one thing. Considering that there are so many exchanges, we have a lot of exchanges apart from Quidax. I'm sure every other person here knows like 5 other exchanges that they can sign up on to start crypto arbitrage trading. So Tommy, my question is, how do we know which exchange to pick? Do I just open at any exchange and start trading coins, or are there some red flags that I need to keep an eye out for? And yeah, what are the things that our people here can consider before they choose an exchange that they want to use for arbitrage trading?
All right, thank you, Ebon. So before you start, things you need to consider when it comes to picking an exchange. I think for the first thing I want you to pay attention to will be ease of access. How easy is it to register on that exchange? The security of that exchange. So do your research about that exchange, right? Is it an exchange that was opened yesterday, or is it one that has been around for quite a while and has kind of stood the test of time, right? So the third point I would like to raise would be also the kind of coins that are listed on that exchange, right? So if you take Quidax, for example, as I mentioned earlier, we are very serious about the kind of coins or the kind of tokens that we support on Quidax, right? So most times we have people ask us, oh, why come we don't have 1 billion tokens? Maybe if in the crypto space alone, there are over, I think, 13,000 projects, right? And I'm sure everybody has heard about what is called a rug pull, which is someone starts a project today, people invest in it, and the next thing you cannot find the founder, you cannot find the team, you cannot find anything, right? So in order, we take safety of our customers' funds very serious. So we make sure that anything that we're listing on Quidax is something, the project that we vetted on our own end. We know the guys that are behind the projects. We know the team, how the life cycle, and especially the I'll just say the team behind the project and the validity of that project. That's what I'm looking for. So the validity of the project is also matters, because as we said, you might want to say you want to do one quick arbitrage, make quick money, right? But you're buying a token that is not good, right? Or a token that will not last, or a token that is just a scam, right? So one of the things that we are very big about on Quidax is that we're sure of our tokens, we're sure of our coins that we support, right? So you want to look at the safety of that exchange, the safety of the tokens that you want to trade or want to arbitrage on. And I think last thing is what we've kind of said earlier on, which is the fees attached, right? The fees that are involved in you transacting, carrying out the arbitrage, you have to also account for it, because those fees will be paid off from the profits that you want to make from the arbitrage, right? So I think if you take those three things in mind, I mean, the token itself, the exchange, because at the end of the day, you're going to be transacting on an exchange. So the exchange has to be very good, has to be very solid. And by the time you account for the fees as well, to make sure that you actually have a good opportunity and you can actually make a net profit at the end of the day. With those factors, I think you're fine.
Thank you so much for your response so far. So we have come to the end of this session. Thank you guys so much. Thank you to everybody. Thank you, Tommy Singh. Thank you, Moses, for joining us this evening. We have learned a lot. And I'm sure that everyone is just itching to test out, doing arbitrage trading. I want to drop the link. I want to drop the link to our blog post. The link has more details about arbitrage trading, and you can look it up after this webinar to learn more. I'm trying to do that now. There you go. We're also on Telegram, where you can meet like-minded crypto heads, people who start conversations on coins that are popping, news on crypto, any resource you can think of actually. And then you can, also chat with people and, just have conversations around crypto. I'm also going to drop our Telegram community link here. You can drop your questions on our Telegram and you definitely find answers. Like I said earlier, we are on Instagram, Facebook, and Twitter, and we are Quidax Global across all channels. Our customer support, you can reach us at support@quidax.com. We're not on WhatsApp. Let nobody come to WhatsApp to tell you we're from Quidax. Don't share your password with anybody. Don't share your auth code with anybody. Scammers are really working hard this period. Remember that we are here to make your trading easy, make your USD savings easy, and life is hard enough and we don't want that for you. Sign up on Quidax today if you haven't. Babatunde Agbomeji, yes, I got your keys. And indeed, James, who was the second winner again? Favor Joseph. Okay. So yeah, thank you everyone for joining. Thank you and have a great weekend. Enjoy your Friday, enjoy your Saturday and the rest of the weekend. Bye everybody. Bye Tommy Singh, bye Moses.
Bye everyone, thanks for joining. Have a great weekend. Bye Moses.
Cheers everyone. Tommy Singh, it was a pleasure.
Yeah.